Are you trying to boost your credit score quickly so you can increase your chances of approval and secure the most favorable interest rate? Well, if so, you're in the right place because that's exactly what I'm going to be demonstrating in this video. Welcome back to Finance Made Easy. Today I'll show you a simple way to increase your credit score by up to 165 points in less than a month. If you're new to the channel, please don't forget to subscribe for more videos all related to personal finance. You should know by now that your credit score is crucial for your financial well-being. It can be the difference between getting approved for a loan or being denied, and it will also determine if you're stuck with high interest rates. To help you move from a low credit score to a great one quickly, I am going to break this down into 4 easy to follow steps. First, I'll start by explaining the categories that make up your credit score. Second, I'll explain how points are calculated to arrive at your credit score. Next, I'm going to show you how each category impacts your credit score. And finally, I'll show you how you can increase your credit score in a relatively short period of time. Now let's demystify your credit score. It is divided into 5 key categories: payment history, credit utilization, length of credit history, credit mix, and new credit. Payment history is all about making on-time payments. Paying at least the minimum balance on time for all of your accounts keep your payment history in excellent shape. For instance, if you have had a credit card for 5 months and you consistently made at least the minimum payment on or before the due date, you will have a perfect payment history for that card. This same principle applies to any other card or account you maintain, contributing to an overall perfect payment history. Credit utilization pertains to how effectively you use credit at your disposal. To illustrate, let's say you have a single credit card with a $2,000 limit and a $100 balance. In this case, your utilization rate stands at 5%. However, when dealing with multiple credit cards, the total outstanding balances on all of these cards divided by the total available credit across all of them will give you your overall utilization rate. The length of your credit history is all about the age of your accounts. It is important to point out that if you open multiple new accounts simultaneously, your credit score is likely to be adversely affected. Conversely, having older accounts in your credit history will have a positive impact on your score. So in most cases, it will be better to keep old credit cards even if you no longer use them. Credit mix deals with the different types of accounts appearing on your credit report. Typically, a person with a mortgage, a car loan, and credit cards will be viewed more favorably than a person that only has a few credit cards. The last category pertains to credit inquiries or new credit applications, particularly those that lead to a hard pull. In essence, this signifies that each time you seek new credit, and in some cases when you request a credit line increase on your existing credit cards, your credit may experience a slight decline, typically by a few points. Now, here's the key. These categories are not equally weighted on your credit score. Payment history is the most important, making up 35% of your score. Credit utilization is next at 30%. Length of credit history contributes 15%. Credit mix and new inquiries each make up 10% of your score. The highest possible credit score is 850 and the lowest is 300. So these categories combined can impact a maximum of 550 points on your credit score. So what does this really mean? It boils down to this. If you consistently make on-time payments, the maximum points you can earn from your payment history are 192.5. Additionally, if you were to apply for 100 credit cards in a single day, your credit score cannot decline by more than 55 points because of new inquiries. This is because payment history contributes only 192.5 points towards your credit score, while credit inquiries account for 55 points on your credit score. This applies to all the other categories. Now, in order to rapidly improve your credit score, your primary focus will be reducing your credit utilization to 3% or less, potentially increasing your score by up to 165 points. There are two effective methods to achieve this. First, by paying down your balances. To do this, you'll need to know your credit card's billing cycle closing date, which is usually a few days after the due date. You must ensure that your balance is at or below 3% before the closing date. In this example, the closing date is 3 days after the payment due date. This means that the closing date for the December statement will be November 17. To increase your credit score in November, the last day you will have to bring your balance to 3% or less would be November 16. You will also need to know when the credit card company reports your balance to the credit bureaus. Continuing with the example, this company reports your information on the 17th, which is the same day as the statement closing date. This is the day when you will see an immediate rise in your credit score. You will need to do this with all of your credit cards to get the maximum benefit. You can find the report dates by using free credit monitoring services like Credit Karma and Experian. For those with multiple cards, it's likely you'll have the various due dates and report dates. To streamline your monitoring process, consider grouping these dates. For instance, if you have 4 credit cards, you could arrange for 2 to be due on the 1st of the month and the remaining 2 on the 15th. Most credit card companies will allow you to adjust the credit card due dates to dates that are convenient to you, either online or by calling in. The second method to reduce your credit utilization by 3% or less involves increasing your available credit. You can achieve this by requesting credit line increases on your existing credit cards. It is crucial to distinguish between soft pulls and hard pulls in terms of their impact on your credit score. You should check with your credit card company to determine the type of inquiry they'll make. If it is a hard pull, you can choose to request credit line increases on cards that only do soft pulls, which will protect your credit score from unnecessary dings. Another way to increase your available credit is by becoming an authorized user on someone else's credit card. It is worth noting that this individual doesn't have to be a family member. Anyone can add you as an authorized user. However, you should make sure that the person adding you has an excellent credit history. By becoming an authorized user, you gain access to their positive payment history, the length of their credit history, and the credit limit associated with the specific card. All of this will be incorporated into your credit report. On the flip side, if the individual has a maxed out credit card and a history of late payments, these negative aspects will also be transferred to your credit report, which should be avoided. You might be wondering about the potential risks associated with being an authorized user. The good news is that you can be added as an authorized user without gaining access to the credit card. Furthermore, you can be removed as an authorized user at any time, with the added benefit that any associated credit history will also be erased from your credit report. Give this method a try and you will see a significant increase in your credit score, especially if you typically carry large balances on your credit cards, which should always be avoided. While lowering your credit utilization will be the easiest and quickest way to increase your credit score, don't forget about the other categories, especially payment history. Pay your bills on time, ideally in full, and consider setting up autopay for at least the minimum amount to avoid missing payments. A good credit score will increase your chances for credit approval and save you money. If you found this information helpful, please don't forget to like, subscribe, and share. Until next time, keep managing your finances the easy way with Finance Made Easy.